All right, looks like we're recording. This time we're gonna do a little sum up from everything that we passed through, and I'm just gonna go through a list of things that I have written for today so that we can prepare for the next one where we're gonna be looking at some trades, and then hopefully we're also gonna be answering some questions that have been presented in guidance, mind mastery, and off topic as well when it comes to trades. Um, we had a couple of people reach out, like Lawrence, asking great questions, talking about best ways to identify a niche strengths that we can utilize in trading, and once identify how to match the strength with different types of systems and find a system that suit them. And we had great questions like these ones, and we also had great questions. So wait, let me just look at it right here. We also had really great questions by Lehel, by Aury, and by a couple of other people. But nevertheless, I'm going to start with a sum up of everything we went through before we go to the next one, where we are going to talk about the strategies, how important they are, and how we can actually work on the trading risk management frameworks and to find the best strategy working for different psychological styles of traders. So I'm going to start with why most traders fail even when they know the strategy. And this is a topic that I believe is going to resonate with everyone. And I really want to explain the gap between knowing what to do versus actually doing it, right? So the key points here obviously are everybody knows about risk management so far, and everybody knows not to revenge trade, and also everybody knows not to overtrade. We've talked about this for so long, and but in reality, the emotion always overrides the rules. So I guess the kind of core idea, what we're talking about here is trading success is not just a strategy, it's actually an execution under stress. Sure, it is a strategy that we want to work on and things that we want to, really nail down. But right now, I want to talk about the raw emotions and the executions that we have to execute under stress, right? So I want to discuss the emotional discipline, the decision fatigue, and the psychology of losing streaks, and also the cognitive biases. And I guess the three stages that every trader goes through, and this is a very, very, very strong one at the core, is the stage one, the strategy hunter. So this is a person who's hopping through indicators, looking for indicators, trying to learn indicators, trying to find the best indicator they can and implement it in their trading. And then the second part of the first stage is also the system hopping, which is uh, it's a very good one, and I believe that system hopping is something that is very important and integral to learning how to trade and understanding your psychology. But I believe it's one of those kind of tutorial hells that people can get stuck in, the same way how when you're learning how to code, for example, and instead of coding, people would spend hours and hours and hours and hours being stuck in tutorial hells rather than actually executing systems. And the last one is the chasing signals. Again, nothing wrong with having signals, nothing wrong with having a group of people that you can trade with or somebody who can share the signals with you and really help you how to trade. But it's also one of those perpetual hells where you could be consistently just chasing for signals rather than working on understanding how to follow the signals and what kind of signals is the person who's sharing the signals with you sharing, right? So you can understand how they execute it and why, and thus bring something towards your trading style. Now, the stage two is the system believer. This is a person who believes that a strategy is perfect, and this is also a person who blames losses on execution. Now, this is a really tough one because I'm pretty sure that every single trader has fallen into this trap of a system believer, where they actually find a strategy that works and a strategy that they're executing, but then when it comes to actually, going deep down the rabbit hole and executing trades and then actually noting it all down in their journal and writing it down, a lot of losses pile up, and it is all blamed on the execution, right? So people go back and forth looking. If people go back and forth looking into what went wrong, they will see that there is no blame on the execution, but rather on themselves. And of course, the stage three is the risk manager, and this is, I guess, something that I've been talking about here all the time. Besides journaling, this is a person who understands the real edge, that the real edge is risk and consistency, right? So I would want to say, like, the main message of these three stages is that professional traders and professional trading is boring consistency, not excitement. I think this is something that we very well touched in the previous one when we broke down the boring consistency, and we had Vic here as a guest who was talking about pain and how important pain is, and how we all have to go through this phase of inflicting pain on ourselves and our trades and everything that we are going through, just to make sure that we understand that pain is not going to go anywhere. Pain is going to be part of our daily trades and everything that we do in our life, no matter what, right? So to really get into it is the real edge of trading, and it's not what you really think it is. It's it's mostly traders think the edge is basically what I mentioned here in the stage one, two, and three. Uh, People believe that the edge is indicators, setups, and patterns, right? So they're like, oh, let me find the best indicator, and this is going to indicate to me if the chart is going to go up and down, and this one's going to follow the liquidity, and then I'm going to use my setup, and then there's already patterns there, and I'll be able to combine it all together, and voila. But the real edge is risk management, position sizing, psychological stability, and obviously the boring one, consistency, right? So, and sure, just to reiterate what I said here, there is absolutely nothing wrong with having good indicators. They are important. And there is absolutely no reason to trade without a setup, because you need to have your setup and to know when you're going to enter, when you're going to leave, what you're going to do. And obviously, absolutely, obviously, you have to follow your patterns and make sure that you can see reoccurring events in order to know how you will execute your trades. And I've mentioned this many times, and I can't wait to start showing this from the next episodes, how important candles are and candle patterns when following different systems and setups. But again, the real edge in trading is not what people think, the things that I've mentioned here, but it's actually risk management, position sizing, psychological stability, and consistency. And I will give you an example, right? There's a trader A and a trader B. A trader A has 60% of win rate, but really bad risk management. And for example, the trader B has 40% of win rate, which is way lower, which is 20% lower, but he has strong risk management. And if you're going to ask me, well, who do you think is going to make more money? The person who's having 60% win rate, or the person who's making 40% win rate? Well, mathematically speaking, the 60% is going to make more, but the 60% more trader here has bad risk management, with a 40% one has a strong risk management, meaning that the one who's having a 40% win rate with strong risk management is going to make far more money than the trader A ever will be able to make. So sure, as much as indicators are important to a certain point, and setups and patterns, and obviously going through stage one, two, and three between indicator hopping, system hopping, and chasing signals, and thinking that strategy is perfect and blaming losses on execution, and obviously the stage three also, where you understand the real edge of risk and consistency. You can go through all of that, and your win rate can be even 20%. But if your risk management is in point, if you have your position sizing correctly, and you have your psychological stability to do that over and over and over and over again with the consistency that we mentioned as the last point, with those 20%, you will make more money than the trader with 60% ever will, just because of the bad risk management. And I want to just go through the 7 different trader personalities that I believe are very important when mentioning all of this. And I think this is very, very important because people will be able to identify themselves, and if not now, at least in past and different stages that they went through. And I would say there is the gambler, the analyst, the perfectionist, the revenge trader, the algorithmic thinker, the patient sniper, and the risk manager. All right, and obviously, the last one, number seven, being the risk manager, is my favorite one. And obviously, just like every stage of becoming a very good, stable trader, you have to pass these seven different personalities, and they all have their strengths and weaknesses and best strategy, which suit all of them. So not necessarily different types of styles of personalities in trading. They don't necessarily have to be bad. They can be good and bad depending how we're looking at them. Because the gambler could be gambling, but for example, I have a very good friend of mine who trades a lot, and he actually loves to gamble when he's trading, which I completely am against. But interestingly enough, he wins more than he loses, right? But it doesn't mean that I should encourage this. But there's always different sides. But then there's also the analyst, the one who likes to analyze everything, who's going to go, um, through all the indicators, through all the setups, through all the patterns, and then he's going to sit down and he's going to count his position sizing, like I've mentioned, and obviously, hopefully, have the psychological stability and the consistency that he needs in order to assess his risk management. And this is all important, right? But then you have the perfectionist, who's even worse. I think this is a person who gets stuck in the analysis paralysis. This is something that Crypto Data has been talking for very long. Even Ed here, welcome Ed. I'll have you talk in a bit here with me. We've talked about this even with Ed, because Ed has a lot of his own traits that he's doing, and he always tries to push it to perfection, and it is a certain psychological barrier that really pushes you further to get there. Then you have the revenge trader, which I think is the worst type of trading, at least in my opinion, because revenge trading or anything that has to do with revenge will always personally wreck people. That's what I believe. And then there's the algorithmic thinker. I think the algorithmic thinker is something that is very prone and very popular these days, especially with the rises of Claude and different LLMs and AIs that we have, because it really kind of allows these LLMs and AIs to collect the data, decipher it for us, and create different algorithms where we can really, dive deep into not only polymarket structure, but overall just follow even memes or follow different tiny tokens that go to, under 1 million market cap. And a lot of people might say, well, that doesn't make sense. It does. There's a lot of people that I know who make 2 to 3 SOL a day trading under 500k market cap coins, because they're really fast in and really fast out, right? And this kind of goes to the patient sniper. I guess it kind of goes hand in hand with the algorithmic thinker, because you have to algorithmically calculate everything and snipe these positions really early, and then sell even at 10 or 5 or 15% of profit and never look back. And when you continuously do this over and over and over again, you could easily make 2 to 3 SOL a day. You could say, hey, that's not much. You're making 100, $200 or $300 a day. Yes, but it can compound. And it's obviously not a day, but it's approximate 1 to 3 SOL a day, right? So even if let's say if it evens out to 1 SOL a day for 30 days, that compounds. For 3 months, that compounds even more. And again, it's the risk assessment that we mentioned up when we were talking about different stages that every trader goes through, and the real edge of trading that I've just mentioned together, that really forms a good trader. And also the risk manager, the one that loves to assess his risk. And this is something that we're going to discuss in the next one. I have created a couple of pages PDF sheet where I went back and forth with real data, some data that I pulled out of my personal journal, trading journal, and other things, where I've absolutely broke down on a beautiful table where it's very visible how losing money can wreck a trader more than making tiny amounts, because when you're making tiny amounts, they're compounding, but the more money you lose, the less capital you will have, and the moment less capital you have, the percentage absolutely skyrockets to being able to accumulate that money back. And what I want to say is, I just want to touch also talking about this. I just want to touch that the professional traders, when they really become good, or even before they become professional traders, just as long as they're good and getting their things done, they always tend to look to prop firms, and what the prop firms actually, look for. So there is many traders, and a lot of them have this misconception. Prop firms look for consistency, draw down control, discipline, repeatable process, and not huge wins, huge win rates, flashy trades, right? So, I mean, sure, right? Uh, so once again, let me rephrase that. Prop firms look for consistency, draw down control, discipline, and repeatable process, and they're not looking for huge wins, and they're not looking for high win rates and flashy trades, right? So it's the same. It's the same what I've mentioned up here. It's not all about just saying, hey, I have a setup, and I have a great pattern, and I have a great indicator. Sure, that's going to get you there. That is really important, but I really want to emphasize on the real edge here of risk management, position sizing, and the psychological stability and consistency that is important to get there, and then to be able to actually execute properly with prop firms. And this is what prop firms are looking for. And there is one more PDF that I'm simultaneously working on hand in hand, and that is kind of touching the previous one that we had, the one where I discussed it with Vic and also with Nico. And that's where I'm saying that I truly believe that the best way to get to prop firms is to treat prop firms as tools, not as the alpha and omega of your goals as a trader, to use as a tool, but also to get there by using demo trading. I truly believe that if somebody wants to really become a good trader and use prop firms, hey, just go to demo trading, paper trading, take the amount that you need of an account, create your strategy, find your indicators that you're working with, right? Find your setups, find your patterns, and now once you have that 150K or 300K demo account, treat it like the prop firm. You're not going to make a mistake. Now you're going to be able to do your risk management, your position sizing, and with that, you'll get the clarity that you need to have for psychological stability, which converts into consistency because you'll be able to do the same thing over and over and over and over again. But I guess that's a very good explanation there. Ed, is there anything you want to add here, buddy?
Yeah, I mean, firstly, I'd say it's great to see both of you in the audience, Philip and Salu. Great points from you, Shem. Yeah, when you were talking about perfectionist, I had some ideas because I know we were talking about that with crypto data. And there's two types of emotional trader. There's a type of emotional trader who expresses it outwardly, which is what most people think of an emotional trader, like the type of person who they can't deal with their emotions inside, that they just impulse trade, they over trade. But then there's also the type of emotional side where people express it inwardly to a point where they never do anything. That's the type of perfectionist, analysis paralysis, that type of trader. And yeah, I think it's very important to notice when you sort of you feel yourself going to one of these sides. Because I know myself recently, I was leaning to the perfectionist side. There's a lot of trades I didn't want to call in the group because I knew that they weren't perfect. And yeah, that's really the only point I had to add is have this complete awareness of yourself and your emotions. Look at yourself from a sort of third perspective, and then see when you're drifting into these different emotional states and recognize that they are both emotional states, even though most people don't realize that being a perfectionist is. Yeah, that's my only point, man. Continue with it.
I love that. I love that. I love what you started with. I love the way you elaborated, and hopefully we'll get to, hear more of you in the next lessons that you're going to join as well. I absolutely love that. And I love that you've spoken about these traps that actually destroy traders. And I love that you took yourself as an example there, not because necessarily it would destroy you, but because you're reflecting with your own traits and your psyche and with your, the psyche here is important to assess your situations. Why? Because you don't want to revenge trade, as you've mentioned. You also don't want to over trade. You don't want to move stop losses because that's horrible, and you also don't want to risk more after losses, and definitely closing winners too early. Now, don't get me wrong. When I say moving stop losses is terrible, I don't really. This is a tricky one. And it's not that I don't have an opinion, it's just really tricky depending on what your system is. Of course, when you have to move a stop loss, you will. But I believe that this is one of those traps that people fall into because if you can just move a stop loss once, you'll do it twice. And you can do it twice, you'll do it 5 times, and before you know it, you're becoming asystematical. And I truly, from my experience and from a lot of experienced traders that I have around me and talk to daily, and not only that, but we have debates here with Ed, with Nico, with Crypto Data, and we spend hours talking about this. We truly understand how important it is that people don't fall into this psychological traps that destroy traders. Again, just like moving stop losses or risking more than more they can afford to lose, or especially risking more after losses. If losses occur, people should stop, go through their trading journal, see what went wrong, and then also open their personal journal. Sorry, guys, a personal journal that they can go back and forth. And I remember when we had a chicken nugget here, and I explicitly was helping him, and I told him, "Hey, man, when you're journaling your trades, make sure you're journaling your life at the same time." And then he realized that he had a certain patterns of failing trades. But then when he sat down and he's cross-referenced his failing trades with his personal life, he realized there were key elements in his personal life that did psychologically affect his trade and his trading. So, maybe some people are falling into psychological trap not because of their skills, but because of the environment and the psychological situation they're being pushed in, maybe by their family, maybe by their brother, sister, mother, girlfriend, wife. It doesn't really matter what, right? What matters is that these things are being written down side by side in two different separate notebooks so that people can go through them and not fall into these beautiful or horrible psychological traps that Ed mentioned here. And I think this is great. And also, while we're there, I'll just, mention, what the brain does and how professionals prevent it and what's the big difference between the amateurs and the professional traders. And it's very simple. At least from the experiences that I've seen around, I've always realized that amateurs more focus on entries, signals, and indicators. And again, it's nothing bad being an amateur and nothing wrong with looking at entries and signals and indicators. We all have to. But we're talking about pure focuses here. And if anything, I've always seen professionals always, absolutely always focus on risk, the process, the position sizing, and the statistics. Because they can really sit down and look at the whole picture rather than just looking at entry signals and indicators, right? Because a retail trader question would be, where do I enter, right? And a professional question would actually be, what is the risk profile of this trade? So it's not about where do you enter, but what is the risk? How much space do you have to cram yourself in that trade or expand and take, what there is to take out of. So I think these are really good key points that are very important, and I love that Ed mentioned them. I think they're very important, and also they go hand in hand with everything that I've talked here about the seven different personalities, and the real edge that I've mentioned in trading, which is not what you think, and the three stages that we went through, and obviously why most traders fail when when they think they know the strategy rather than holding the true key points of trading. But I guess this is pretty much it for today, because I wanted to sum up everything that we talked about and everything that we've discussed, and I want it to be a very nice crossover into the next one. And Ed, is there anything that you want to add here, or is there anybody here in the audience who has any questions that we can answer? I see Ed says, if you guys have any questions, let us know. Either you want to come up and yeah, if you guys want to come up here or ask us any questions, go ahead. But yeah, Ed, do you have anything to add, buddy?
Nah, yeah, I mean, I was gonna say if anyone has any questions or if anyone wants to come up, just let us know. But Shem, that was great, man. Great, very informative. Felt like I learned a lot from that. I appreciate it.
Thank you so much, buddy. Likewise, like always. But yeah, as I've mentioned, this was a shorter one, a sum up of what we went through, what we did, discuss a couple of things as well that we didn't before here today. And I wanted this to be kind of like a 30-ish minute crossover, kind of like a sum up. And very happy to have you here, Ed. I would love to have you on more, so feel free to join. Oh wait, Philip wants to say something. Let me invite Philip here. So let me. There we go. Hey, buddy, how are you doing?
Yo, I'm doing well. How are you?
We're doing amazing, buddy.
Nice. Yeah, so when I came in, you guys were talking about the prop firm trading. Um, I actually just started doing that, and I noticed a similar thing that you mentioned, just being a lot more patient with the trades on that account as opposed to on the normal account. Uh, it's definitely a lot easier to be patient, but it actually helps, for me at least, helps realize what actually are the good trades to take and what aren't, differentiating between which ones are actually good trades as opposed to ones that are being rushed when you have to stop and think about the prop account. So that's pretty helpful, but also just sharing something I've kind of been dealing with recently is like I've been having trouble like sleeping, super tired all the time. Generally, I'm only able to focus for like a few hours a day. Recently, which sucks because usually I'm, going at it all day in the trading and just learning and all that. But I've still been focusing on learning and studying. I've been studying a lot of ICT stuff, but it just haven't been as active all around in the group and stuff. So that's been kind of frustrating, but once I'm able to get back in the swing and get rested, I'll be back into it more so. But it just goes to show for me that is a whole nother thing that incorporates into not only having the right mindset, but having just your body and mind in sync so that you can be the most productive, because it's been hugely like detrimental not having that piece of the puzzle in order recently for me. So yeah, I just kind of wanted to share that because yeah, sleep's super important, turns out.
Thank you for sharing that. Do you want to go first, Ed? Or
Yeah, yeah. I mean, I was just gonna say it's great you have this awareness, and it is extremely true. Your life outside of trading heavily impacts your life inside of trading. It impacts all of your decisions. I mean, as I think with your mind, your environment controls your subconscious. Your subconscious controls your conscious, which controls the actions you take. So, bro, it is extremely true that working on sleep, working on, or in general, just relationships around you, the daily routine, it has a massive impact in the trading. I think it's very good you have this awareness because it is what all the best traders have.
Thanks, man.
Absolutely.
Appreciate that.
That's why I kept saying here that that it's very important to journal your real life, and it's very important to journal your real trades. And I have this beautiful uh, blessing in disguise where I have this. I have obviously I write all of my journaling in notebooks, old fashioned, old style, whatever you want to call it. But I also have a e-ink tablet between my computer and those notebooks because obviously I take screenshots of my trades and I stored them nicely with screenshots and everything elaborated in between. And it's very easy for me to go through my day and day-to-day tasks and things that I have done and how I felt versus how I traded. And absolutely, I want to say it's great as well that you've managed to discover that you found that there is an importance to sleep, and of course there is. It goes same way with food, and it goes the same way even with gym. You could be lifting weights every day, but if you're not sleeping well, your muscles are not going to grow. So that's absolutely important that you've discovered. But also, you've mentioned that you've entered at a point where we're talking about prop firms. So I guess you've missed a lot of the things that I said before that, but nevertheless, it's fine because I worked out a, PDF, actually two, three PDFs that I'm working on simultaneously right now because they go hand in hand with everything that we've discussed here and a lot of things that we've said prior to that and even to this here. And I was mentioning to those who are not into prop trading or who haven't got an account like you have right now is to, just take a paper trading or a demo account and treat it as a normal one. And then I was going through different styles and stages and developments of trading to really become a trader where you have to understand this quote unquote boring consistency and stability is the proper way of trading. And I've mentioned this in a couple of previous money mindset masteries when I was talking about most people who get into trading, they really rush things. And the reason they rush things is 99% of the jobs have nothing in common with trading. Because if you're working somewhere, your boss or your conscience is going to be come to you and it's going to speak to you and it's going to be like, hey, what are you doing? Do something. Where it's counterintuitive with trading. Trading is that thing where you have to sit down, you have to check your risk management, check your positioning, look at the setup that you have. Obviously, if you have patterns and repeating and indicators that you're using is less important, but even that, and then sit down and actually look what makes sense and just patiently wait and wait and wait for that to play out. But nevertheless, I'm curious to hear how's your prop account going? Is there anything you could share with us? And I have very much appreciated that you came here on the stage and shared this with us to begin with.
Yeah, yeah, for sure. I've also noticed that as far as being patient, 'cause I used to, well, I still do struggle a little bit with being patient, but not nearly as much as I did early on in trading. But I've noticed that if as long as I keep the charts on a higher time frame until they reach a crucial level, and then zoom in to take a trade, then I'm not as distracted or um, or like convinced, falsely convinced by the noise that I see on the lower time frames. So as long as I'm not even looking at that, that kind of helps. But yeah, with the prop account, it's going well. I just got it like last week or something like that, or maybe the week before. I'm only taking a couple trades, but I've almost got it um, done. Uh, I'm up about a little over 50% of what I need to get to pass. Um, so it's going pretty well. I've just been being like super patient with it and uh, really just waiting for the good opportunities to present themselves. Like I'm planning to take a short here on Solana pretty soon, but I'm just watching it for now. But yeah, it's going pretty well so far. Can't complain there. Just kind of taking it slow, but slow and steady.
Nice. That's great. That's absolutely great. Thanks for sharing that. And I think
Yeah.
in the general chat, I also shared my screenshot from Solana, and we're basically touching right now. You could scroll up and see it, and we're hitting in that order block, the one that I specifically labeled bearish order block, and I did some proper drawings on it with arrows for people to see because I was elaborating. I wrote a lot of things. That's why I did those arrows, and it's very interesting to see because I've mentioned that now we're gonna hit that bearish order block, and there's two scenarios. There's a scenario where it goes up, or there's a scenario that we've seen one, two, three, well, basically three in a row, and then another three times going down after that. That's why I named it bearish order block. So let's see how that's going to work out, especially since we had a green Monday and Tuesday. That's going to be very interesting indeed. But also, yeah, man. Besides that, I'm glad that you're doing great, and I'm glad that you're patient with your trades. That's amazing. Halfway through is pretty much you're almost done. You're almost there. I think the first 50%
Yeah, for
are,
sure.
yeah. I think the
Yeah,
first,
and that it looks like it's bouncing off that or rejecting off the bearish order block right now. But yeah, I might end up getting in. I've been watching Sol as well. I might get in on if it goes down and then retests and starts rejecting from that. Might get in
absolutely,
for a short.
absolutely, absolutely. I see it there. It's creeping. It's touching it with its wicks. So let's see where it's gonna go.
Yeah.
And interestingly enough, with the previous one, it did it twice in a row, and then it broke through it. So I don't know. Let's see what it does. Let's see where it goes. It does have a slight kind of like upwards channel. I don't want to call it a channel, but there is a little leaning thing that it's holding on to. So let's see. Let's see what it does. But I'm looking at the
True.
RSI as
Could
well.
also wait for like a change of structure or a change of
Exactly.
character, and
Exactly.
then maybe change of character, have it bounce back up for a retest, and then take a
Exactly.
short there. That'd probably be the safest bet, honestly.
Yeah, yeah, and the RSI is there as well, and it's going to be an interesting crossover. So, I'm looking forward to that crossover right now. I'm looking at I have the RSI open at the same time. But just to add to answer what you said previously, thanks for sharing that, man. And I'm glad that you're 50% through. I think the first 50% is the hardest because, again, psychology here and psychological stability here is the key factor more than trading. And I believe that if people fail the first trade or the first, I don't know, 30-40%, then they're doomed. They're just, psychologically dragging themselves down and failing with a prop firm. But, once you have the first 50%, you're there, buddy.
Right, and then you get stuck like trying to revenge trade, like, oh, now I'm down, I gotta make it back up, and yeah, no thanks. I think part of what's helped me in trading is starting to realize that it doesn't take very many trades. You need like one good trade a week, tops. I mean, you could probably find more if you wanted to, but I think you probably only need that, um, rather than trying to take multiple, being in trading on the lower time frames constantly, which is what I used to do, But yeah, keeping on the higher time frames, and then just being patient and realizing that it doesn't take a lot of trades; it just takes the right ones. Has been really helpful.
Say I 100%
Yeah, yeah, go ahead.
agree with that one.
Me too.
My
Me
trading
too.
style is extremely similar. Like, one of my best months I take around 8 trades, usually around one, which is absolutely amazing, and then covers a living for, let's say, 3 or 4 months. So, for example, Bitcoin shorts had a very profitable one in October, then had one, I think, last month, and then hopefully going to have one soon now. Is in trading, it is, if you're a swing trader, it's very much about quality over quantity. And in my opinion, that's where the real money is. Sure, you can make a lot of money just focusing on lower time frames, scalping, sure. But swing trading, if you weigh up the money with the amount of time you need to put in, plus not having to look at all these little time frames, keeping having to go back and forth or whatever. Yeah, man, it's I completely agree. It is the best. It's the best strategy.
No
And
doubt.
this is a conversation that we have with Ed and Crypto Data so many times, even when we're having our team meetings and everything, when we're looking how to better group and everything, and we understand that like holds are important, but this is where seasoned professional traders differentiate themselves from amateurs or people who, and not necessarily just amateurs, but people who are not understanding how to, you know, properly trade into these things, because we always understand how it's better to have one trade a week, that really good trade, the consistent trade that happens at least once a week, rather than having 10 pointless trades a week. And this is something that I mentioned just before you joined, Phillips. This is something that I've described, and I was talking about if you have a trader A and a trader B, and if the trader A has 60% win rate but bad risk management, versus where the trader B has 40% risk management but strong risk management, even if it's 20%, not 40, and he does just one trade a week, but he has really good risk management, he's gonna make more money than the 60% win rate trader with bad risk management who's trying to, go after every single trade.
That's pretty crazy to think about. But
Yeah,
total, I mean, I get that that's totally could be the case, or it probably is the case. And yeah, it's just super helpful to stay away from the noise. Because yeah, that was like my biggest problem, I think, in the first several months of trading, was just trading on too low of a time frame, doing the more scalping stuff and following the noise and just over trading, revenge trading, just getting all that out of my head and out of my view, uh, is just, yeah, that's it's the way to go for sure, my opinion.
this is why I took some time, and that's why I'm creating these PDFs so that people can not only listen to these and take their notes, but also have the PDFs to study them. Because I'm actually creating a table where, if you're thinking off the top of your head, you wouldn't think that the different in percentages is big, but it's absolutely massive, because it's not linear the way your profits and your losses actually play out with percentages. And this is why I'm saying that a person with even 20% win rate is going to make more. But thank you for sharing that. I also want to read Salu's message, not to have him left out hanging here. He says, I just want to share that recently I structured my strategy into three risk setups. So A plus A and B. Since then, my perspective on the market has changed quite a bit. Things feel much simpler now. There's a no longer a long chain of decisions before taking a trade. With everything clearly defined and risk being non-negotiable, trading feels much more relaxed. At the same time, I've been dealing with some health issues, so I'll be stepping back for a while, focus on that. So I've also started journaling daily again. I hope to get back to the level I was at the beginning of the year. Well, I'm sorry to hear about your health issues. I hope you get that sorted as soon as possible. But I'm absolutely glad that you've sat down and created these structure strategies and obviously rated them. And this is something that we've discussed as well. about rating our own trades as well and bringing kind of like a difficulty level to them. 5 stars, 3 stars, 2 stars, 1 star, or A plus, A, B. This is really good. This is something that really simplifies it to a average trader understanding how difficult the trade is. And again, depending where we go with the trade. And I think this is the exact point that I was making when I was talking about amateur and professional trader, where you know, the retail trader's question could be where do I enter, but the professional one would be what is the risk profile of the trade, right? Because you want to look at the big picture to understand where you're going. So I think this is great that you also have, just like Phillips here, created your own awesome strategy and structure that you're going back and forth with. And I'm also glad that you're doing your daily journaling. I think this is absolutely amazing. Daily journaling would not only help you with your trade and trading, but it will also help you with your personal life and your relationships with your friends and family and everybody around, because this is the true and best way to tap into your shadow self, where you have your book of shadows, where you write your shadow and your things that you're going through, and you can, flip back and see how you acted and reacted and how you handled the situation, and then you can draw conclusions. Oh, this was a bad situation, and then it affected my trades. Oh, I've handled this situation perfectly, and then I was in a good mood, and then I came home and I saw this awesome pattern, and I elaborated on my risk, assessed it, took the the data, crunched it, analyzed it, made a trade, made money, win, win, win. But I hope I answered everyone's question. Is there anything you want to add, boys, or should we call it a day?
All good. I think you covered pretty much everything, really.
Awesome.
Yeah, I think that's it for me for now. Appreciate it, you guys.
I appreciate you too, man, and I appreciate you, Ed, for coming. I really enjoyed it. Phillips as well, Salu, and everybody else. And see you next week. Thank you for coming.